into the questions now that we've done all of the introductions. So our first question is, what does it take? And please, as panelists, feel free to join in on any question that suits you the best. I'm not going to call on you individually unless I see that you're not talking, because I'm a academic by nature and a teacher by nature. So if you don't talk, I will call on you. But what does it take for a client to get funded with your organization? For example, what kind of credit scores are you looking for? How many years in business? Do you fund startups? Do you require collateral? What kind of business plan or other requirements?
I'll start. So our minimum credit score requirement at CDC Small Business Finance is 620. I think I mentioned before, our minimum loan amount is 20,000, and our max right now is 250,000 in my department. And we can help startups. So that can be anyone from, hey, I've been working with the Small Business Development Center, and I have a business plan and projections. As long as we check to see if you personally cash flow, and if that is the case, then you could potentially qualify for a startup business loan. And we also have clients that have an existing business or want to acquire a new business. To be honest with you guys, it used to be about 50% startups and 50% existing businesses. And now we are seeing a lot of acquisitions. So we are helping a lot of people kind of like that maybe worked at a Subway and now want to purchase that Subway. It seems a lot of the older people that have owned a business just with COVID, they're kind of ready to sell their business. So we're helping a lot of people do that. In addition to that, we're looking for cash flow. And it is lower than a typical traditional bank like Chase or Wells Fargo or something of that sort. They usually require a 1.25% cash flow ratio, and we require a 1-to-1, which just means it's a little bit easier to qualify with us. And cash flow just means that we're looking at the gross income per se that your business is making. We're looking at your expenses, and then we're looking at after all of your expenses are paid off, what is that net income or that money that's left over. And so we're looking at that ratio to make sure that one, you have the ability to repay the loan that you're requesting, right, that monthly payment. And then two, that you can do that and still continue to run your business. And then you have some money left over. So that's kind of what cash flow ratio is that we're looking for. And so in some cases, like I mentioned, I know Lucy mentioned that, some lenders do SBA loans. So we do have SBA loan programs, and we have other programs as well. But our SBA loan programs are kind of for everybody, right? But then we have in addition what we call impact loans. So for example, let's say that we were unsure we were on the margin of whether or not we can approve you or not. But then in addition, your business is located in a low or moderate area. Or we were unsure, on the margin of approving you or not, but then you're Hispanic or African American. Then we have these other loan programs that little margin will be pushed, and we can place you in a different loan program and get you approved and get you a loan. So that kind of describes, I think, a little bit more in detail what we're looking for. If you are a startup, we're still looking for that cash flow ratio. We're just looking for it for you personally, right? So don't quit your job. A lot of people want to start a business and they go and quit their job. Don't do that. It will be possible for you to get a startup loan. I know any lender that does help with startup loans, they want to make sure that you're going to use the money that we lend you for your business, right? Which means that you have to have an ability to pay for your car, your rent, your mortgage, your care products, all your personal living expenses. And then as far as collateral, last thing I wanted to say, as far as collateral, before COVID, we never required collateral. Now it is about a 50% chance where we may or may not require collateral.
Very nice. Thank you. And you have such great programs and information. Would you mind dropping your information into the chat so that everybody can contact you through after this if they need to? Thank you. And anybody else want to give feedback? What are you looking for when you're funding a person?
Brianna, this is Fred Crispin with United Midwest Savings Bank. The small loans that we provide are credit scored using the same model that SBA uses them behind us now, the Fair Isaac Small Business credit scoring model, which enables us to approve initial credit the same day we get the loan app in. In general, I tell folks that 95% of our loans are pure startups, meaning the day we fund is the day they open their doors to start selling widgets or services or whatever they're doing. And typically you need a 675 and up to be able to score in that model. That model is looking at a lot of different things. Obviously, personal credit is heavy part or a factor in that model, but it also is looking at the risk of the industry that the borrower is involved in. Time in business, startups go through a module that's tougher than the module that existing businesses, somebody that's been operational more than 2 years goes through. It looks at percentage of revolving available to the individual borrowers. It looks at how many people's actually pulled your credit in the last year or two. So there are a lot of different factors that go into that scoring model. It's not just pure personal FICO driven, but it does, like I say, it enables us to approve loans very quickly. We are the 7th largest SBA lender in the country, so we're pretty experienced at doing this on a broad basis all over the world, United States.
Yes, Larissa here at Accessity. I do have some list of do's and don'ts. So one of my favorite one is the don'ts, because that would put you ahead of the game if you do look into that. And that is, like Miriam said, don't quit your job. Borrow from predatory lenders. So I'm not sure if you all know what a predatory lender is, but these lenders are usually the ones that charge you very high interest rate, and they charge you daily interest rate, or they'll tell you, hey, like, don't worry about it, this is only at 3.99%. But then when you try to pay off that loan before, they'll charge you a whole amount of percentage, and sometimes you'll be paying double of what you borrowed. So that is one. Start before speaking to the experts. Sign the lease. Don't sign the lease before loan approval. There's some people who get into leases. They get super excited and pumped up, and they don't want to lose that one building, and they sign a lease, and then something happens and they can't get the capital. They are already stuck with a monthly payment for a lease. Do not start without a clear plan. So if you do not have a clear plan, I encourage you to please go to the SBDC and start with them. Start working on, just a business plan. Write 5 business plans if you need to, but you need to have a clear plan. Do not run out of money. I do have a lot of people that say, oh, you know what? Borrowing money from others is not something I like to do. And then they start off with maybe the $5,000 they had in their account. And once they exhaust all that money, they probably don't have revenue to even open the doors. And that's when they're trying to start looking for a lender. And then like here at Accessity, and I'm sure many of my other colleagues here, we will not be able to lend you money because you do not show any capacity to repay the loan. So those are usually my favorite, the don'ts, just because I put a red flag, to those who I talk to. And the do's: register your business, open a business bank account, protect your credit, ask questions. This is a great opportunity to ask people before you apply with others. Get capital before you need it, and report business revenue and expenses accurately on your taxes. So that's another thing. If you want to grow your business and you're showing negative numbers in your at the end of the year, it's very hard for a lender to lend you money and for you to expand.
All right, this is
Thank you, Larissa. Actually, I want to make sure that we stick with giving everybody an opportunity to share how their funders and what their organizations are looking for in terms of credit score and things like that, before we move on to the next topic of conversation. So Andrew, do you want to share that information?
Yeah, I'm gonna run through it. So I got my contact information on screen at the very top. If you call me, I'll be able to figure it out in a phone call. So that's all fast. We can figure out whether you're lendable or not. As I mentioned earlier, we have the easiest underwriting. So I've done credit scores of 480, which I know no one in the room has done. So we don't look at that. We really look at the business. It could be a startup, and we've even funded startups before they had their first revenue, knowing that revenue was coming shortly and they were going to have receivables, which I mentioned is what we fund. And we can get it done in 5 to 10 days, depending if you're getting a package. We ask for financials, tax returns. We'll learn who you are, just like all the other lenders in the room. But if the business has potential to grow and grow rapidly, we're going to be a tremendous partner with you. I've taken companies from $1 to $5 million in 1 year. I've taken guys from 5 million to 40 million in 5 years. We can grow very, very fast with you. And so underwriting, the usual stuff everyone will ask for, but on the conversation on the phone, we can figure it out within 15, 20 minutes. That's it.
Awesome, thank you. Anybody else want to share what their organization looks for to fund?
Yes, I can share. At Chase, we're a traditional bank, so we're going to have a little more stricter underwriting. We usually do look for 2 years of tax returns. That's our sweet spot. We can do startups. It's a little bit more difficult for us to do. But again, like I said, if you have a lot of the same things everyone else said, we look for the credit, we look for the 1.25 debt service coverage. But we are able to help you once you get past the initial startup stage, and we are lending full steam ahead. So I just got a line of credit approved for 500,000. So don't be afraid to try the traditional banks if you have the time in business.
Awesome, thank you. Anyone else? Okay, so the next question I'm going to ask, we're running short on time, so I'm going to merge a question a little bit further down. So for the panelists who looked at the questions, just know I'm skipping over the next one. We'll address it later. Can you share with me your first steps a small business should take to access capital with your organization? Aside, of course, from contacting the Small Business Development Center, getting an advisor who can help them get their finances in order, what's the first step that they should do with you?
Can go.
Alex,
They can
would you
call
like
me. Yeah, they can call me, and then we'll go based on an inquiry call. I'll give them a quote on the interest rate and how much money we may be able to lend them, and that is the first step.
I would say
Very
check your
nice.
credit, make sure that information on your personal credit report is accurate. Because a lot of times we find bogus information on people's credit reports. So if there's a problem there, get it cleaned up before you go to a lender.
Get your financials in
Excellent.
order. Have your tax returns, your P&L, know exactly where you stand financially, and know exactly how much you need to borrow.
Any other first steps from our panelists?
I think for a business owner, should talk to a banker for a good, 15, 20 minutes or longer, because every case is different. They may get different partner involved. When in our real practice, the case can drag, from 30 days to 45 days or longer. Most time is not the lender processing, is back and forth, collect different financials. So if we can get ready for the whole picture at the beginning, we know one shot how many financial documents we need to collect. That saves the time extremely.
That's an excellent suggestion, and that's where your small business advisor can help you. They're going to know what the lenders will ask you, and they can connect you with the lenders that make the most sense for you and help you get that paperwork in order before you start the process, so you don't have a 30 or 45 delay.
Just gonna say is make sure that you're honest with your lender. I can't even tell you how many reports are run by my assistant besides your credit. So I will know if you had a judgment 20 years ago or a lien, even if you paid for it. So just be honest. If you have bankruptcy or something, that's pending or a legal issue, like we'll find out. So, I think everybody's in agreement that normally you have a conversation with someone before you apply. I think that's a good idea. You want your credit run, by 10 different lenders, because that won't help you. So in that initial conversation, be honest, because I think pretty much everyone here, we all know.
Miriam, we're struggling. I'm sorry to interrupt, Miriam. We're really struggling to hear you. Maybe you can call in from your phone.
Oh, sure.
Sorry about that. Anybody else want to share while we're waiting for Miriam? Okay, so let's move on to the next question. While she's calling in, she can give that feedback again in a minute. But right now, let's talk about forecasting. What are your organizations what are you expecting lending environment to look like in 2022? You know, we hear rumors, we hear the news, lending's good, lending's bad, it's all over the map. What's the true deal in your organization?
We're looking forward to another
As far as
good, solid year. We're actively looking for loans and borrowers out there. So I think, you know, the last couple of years, believe it or not, even with the pandemic, our loan numbers have been record year after year. And I think 23 will do just as well.
For Marble Bridge, 2021 was a very good year. The government was the biggest lender we think out there in 2020 and half at least 2021. With that winding down, our phones are ringing off the hook. So 2022 is going to be a crazy year for us as people who survived the pandemic, businesses are trying to get going. We'll be going back to the traditional lenders, the banks, and then also to us as well, trying to figure out where the best fit is. But as far as lending goes, we expect it to be a banner year. Economically, it's anyone's guess.
Fair
Yeah,
enough.
Chase
And thank
is-
you for the question in the chat. Just know that we will be addressing the questions in the chat as well. Go ahead.
I was gonna say Chase is looking forward to a great year too. I have a full pipeline. A lot of my team has a full pipeline. We're getting loans approved. We're very optimistic. Things are just seem to be, back to, normal, I guess you could say. So yeah, we're really excited about what 2022 is going to bring us.
Here with Necessity, we're doing amazing. We just expanded to Orange County and LA. So we're getting a lot of applications. We're one of the few who are actually lending to truckers. So we are giving funding for those who want to purchase their truck. And we are working on the COVID relief loan. So anyone who has been in business prior to 6/30/2019, they can get loans with us up to $50,000 with the interest rate of 4.25% and the first 12 months of interest payment only. So if anyone is already in business, they can contact us. And a lot of the guidelines are going to change. So contact me if you're looking for any source of California Rebuilding Fund loans.
Absolutely. So tell me, lessons learned. We all went through quite a bit during the pandemic. As bankers, you all went through quite a bit and you experienced the highs and the lows. Can you give me just one lesson that was learned during the pandemic that would be useful as people move forward? Maybe DeWitt, would you like to share?
Let's see, lessons learned during the pandemic. Well, Pacific Premier kept lending throughout the pandemic. We didn't stop lending to businesses. I think part of the lessons that we learned and a lot of clients learned is the importance of being able to do things remotely. So using services like remote deposit capture to deposit checks, mobile banking, really just making sure that you have all mobile solutions, virtual solutions, so that you don't have to go into a branch. But those are probably the main things that we took away from it. We kept lending during the pandemic. We're lending a lot now. And I think that's basically it.
Do we have any other important lessons that were learned that we want to share?
I think the one thing that my business clients learned and the ones that were successful is the ability to pivot. They're like, okay, this is my business, but I need to figure a way to make it work. And so whether it's a restaurant, engaging in accepting credit cards instead of cash, or having to-go orders, or utilizing a business for something, for PPE, anything that they're looking at the big picture and they're able to say, okay, this is the situation now, but I'm able to take this situation and make it work for me.
Thank you. We had a question from the audience that I would just want a quick yes, no from everybody, because this is a really quick yes, no question. And the question is, do you require a business plan for an existing business in order to fund them? Fred, I saw your answer was no.
Yeah, Marble Bridge is no.
CDC says no.
Chase says no.
No for Pacific Premier 2.
United Midwest is a no.
Alex and Banner, are you a yes or a no?
It all depends, if it's a pure unsecured business financing, we probably want, every case we want to see the success plan. It's always good to, ask those questions. And I answer.
Thank you. And Larissa?
Only for startup businesses who are requesting more than $8,000.
Excellent, thank you. So hopefully that gives you your answer. Seems like it's pretty clear that it's not always required and there are opportunities if you don't have it, but it's great if you do have it. And then let's go around the robin and give everybody one thing that they should be doing and one thing that they should not be doing in order to get funded. So one no and one yes. Andrew?
All right, one no, do not hide things that we're gonna find anyways. So we do complete background checks. You'd be amazed what we can find in doing it. Banks do the same thing. And I had a client recently who didn't tell me that he owed the IRS $150,000. He told me everything else but that. It wasn't a tax lien, but through our background check, we found that conversation. So to help him out, he wasn't happy the way the deal was set up. He got to work out with the IRS, and we gave him a better connection to help him cut a lot of the extra charges that were tacked on. And we're still working with him, and we hope in about 3 months we'll be able to bring him in and get it done. So we're able to find that out. The one thing you should do is, always talk to your bankers. I would always encourage that. And I would also even more encourage talking to the SBDC. I'm losing track now how many referrals I'm giving to the SBDC. And I know this may be in the follow-up question of a success story, but I just had a client that I had everything in place except a $1 million problem he had. And then all of a sudden he let me know he had applied for an EIDL program. And I went to, and he didn't let me know that. He asked for $1 million. And I got the San Diego SBDC involved and got the SBA involved and everybody in that office down there involved. And within 2 weeks, we got him the $1 million. And now this whole company is going to survive. And we're going to grow this guy from like 2 million to 15 million this year. So it was really an effort on everyone's part. So the key is tell everybody what's going on. That's the most positive thing you can do.
Outstanding. Any other yes or no's? Like, absolutely don't do this. Absolutely, you must do that.
No,
Absolutely did not.
Borrow before you go to a lender.
Right,
Yeah.
exactly. I was gonna say the same thing. Don't ask me how much you should borrow. I don't know.
Yes, that's exactly what I was going to say. That's a no. So when you come to any of us, please know, take a quick check of your credit on Credit Karma, and it's free, it's safe, and find out an idea of where your credit score is at and know how much you want to borrow. You never want to go to a lender and we're going through that 15, 20-minute conversation, introduction, and I ask, how much do you want to borrow? And you say, what's the max amount I could borrow from you? And I say $250, and you say, yeah, that's what I want. I say, okay, what do you need it for? And you're like, well, and you have no idea. that is not developing a relationship of trust. And at that point, I honestly would introduce you to one of the SBDC advisors, because you are telling me that you need to do some homework, you need to do some thinking, maybe some projections about your startup. So yeah, be prepared, know your credit score, and know how much money you want to borrow and what you need it for. And if not, it's okay, reach out to SBDC, they'll help you figure all of that out. Yes, I would say, right now is a wonderful time. It's still kind of tax season. A lot of businesses have not done their taxes yet. I do for sure, if you're an existing business owner, or even if it's your first year and you're a startup, talk to your CPA, talk to your accountant, especially your tax preparer, CPA, and let them know that you'd like to apply for a loan, right? Because there's lots of different, I'm not a CPA, but there's depreciation, there's carryovers, there's lots of different things that you can do to prepare so that you have cash flow in your business you know, maybe you decide to take an expense a different year, whatever it might be. But you do have to talk to your CPA and plan if you're planning on applying for a loan this year in 2022, and you haven't yet done your taxes. Let your CPA know, so he's not just trying to make bottom line look like you're, you know, give you all your expenses and you have no income, and then you're asking me why you don't qualify. Well, if you don't have income to show you can make a payment on your loan, you can't qualify. So make sure to talk to your CPA. That's a do.
Mhm.
I will echo that, Miriam, as a small business owner myself, in addition to this hat that I wear at the SBDC. The CPAs can work magic. It's
Mhm.
phenomenal what is legal. You would be shocked. So have one, use him or her. It's definitely beneficial.
Should we talk?
Any other absolute yeses or absolute nos?
I have a don't. Actually, I've had this happen like 2 times in my 5 years that I have a perfect client, we're about to fund, and the client decides to buy a new car. They decide to take on more debt and credit cards. So please, 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 if you are working on a business loan, do not get into more debt, please.
Thank you. And then I want to wrap this up with one question from our audience, because we've had one audience question. And this is about opportunities for businesses that are actually still building their credit in the US, but have exceptional credit scores in their home countries. Have you worked with clients like that? Do you have any recommendations?
This is Andrew from Marble Bridge. As I said earlier, the credit score is not so important to us. It's more important to understand your business and the growth potential. So, you know, your credit scores, you get a credit card or two, you make the payments every month. There are websites that can help you build your credit and give you hints on how to do that and how it affects your credit score. I don't know of any lender that I'm aware of that runs and looks at overseas credit as opposed to US credit. I've never seen that before. So if you don't have many credit cards, one credit card, I can tell you that a lot of students in college have tremendous credit scores. They have virtually no debt and they have one credit card they're making payments on. So to me, it seems like it's fairly easy to build it up if you don't have much debt.
Yeah, as a
you.
traditional lender, we won't accept any overseas credit. It has to be credit you have in the United States. But yes, definitely start building credit. Go to your banker, you know, have a conversation. There's a lot of different, you know, credit cards or small term loans you can do to start your credit.
With us, yeah, same like them. And also we do have a partnership with Trust Plus. They're out of Washington. So if we go into an inquiry call and you need some help and advice in your financials in credit portion, for the credit portion, Trust Plus can help you for free. So we pay them and they help you, and then you come to us.
Thank you. So I'm going to answer one last audience question because it's a simple one. And the question is, should we start with you, which I assume means the SBDC, or start with one of the lenders? And the lenders can chime in on this, but I would recommend starting with an SBDC finance advisor because they will help you get your stuff in order. They have a lot of experience doing this. They know what the lenders are looking for. They know the different kinds of lending options. They know they have connections to connect you to the right people, and they also know how to get your finances in order and ready to go so that when you get to your lender, you have your package complete or as complete as possible, and you're not spending extra time running around trying to figure out how to put together your P&L or, you know, get your financial documents ready for a lender. So that would be my advice to the audience, is start with the advisor first, because they're your safe space where they can give you feedback and tell you, yes, you're doing great, or you got to clean this up before you go in and you start potentially burning relationships with lenders that could be very valuable for you.
Thank you.
And with that said, I really want to do two things. The first thing that I want to do is say we have about 4 minutes left, so I'm going to thank all of our sponsors. We can't be more appreciative to the CDC Small Business Finance, Accessity, Marble Bridge Funding Group, United Midwest Savings Bank, the Pacific Premier Bank, Chase Bank, Banner Bank. Without you, connecting with capital does not happen. It is your financial support and your intellectual support that you lend us on a regular basis that makes this possible and makes this amazing for our audience. And I'd like to take just one last question and have one person here share a success story, something that was just really phenomenal that you were able to do for one of your clients, so that we can end this morning on a high note. I know you all did phenomenal things, and I'm going to call on Janelle. Oh, Necessity, Larissa.
Okay.
Great. So something phenomenal that we do for our clients, we do help people who have had past challenges but are now current. We also help people who have had bankruptcies in the past. So if you have bankruptcies, we can help you out. And that's it.
And then Janelle, I drive past Chase Bank on my way to work, so that's why you popped into my mind, why you want to share your success story.
Oh, perfect. One of my best success stories is I had a client that has a small cookie company and was looking for financing. And so I was able to work with him. We're able to start with getting him a small credit card and get him a line of credit. So he has actually expanded to 2 locations. So it's something where we were able to start small and get the credit built up and get the relationship within Chase, and then able to give him a larger amount of money, and he was able to again open a second location. So it was great, and I always enjoy helping my clients grow their business.
Beautiful. Other success stories that we want to share. By the way, a cookie company sounds like a really good business to be helping.
Yeah, and he brought samples, so it was a win-win for both of us.
Sounds great.
I have
Andrew,
a
you want
success.
to share a success? Oh,
Yeah,
Miriam, go ahead.
Okay, I'll give a success story. I gave it the last time we were on several months ago. We got referred to an SBDC consultant, a client who did about $1 million in revenue janitorial business, and the city of LA gave him a $50 million contract. There was no way a bank would do the deal. There was not any real collateral behind the guy, but the city of LA said they would do everything possible to make it easy for him to fill the contract. And we signed him up and we funded him. We've put out about 8 to 9 million already. And the guy's becomes indirectly a multi-millionaire already. And he's now starting to develop homes and other businesses on the side as we continue to fund him. And so as he's expanding into other things, he's coming back to us, and we're getting him to the right people, making sure he does the right stuff when he goes into the new businesses that he's going into. That's probably one of the best success stories I've ever seen in my career.
Andrew, you're giving me goosebumps. Miriam, you want to share your success story? No, we're not hearing you.
Can you hear me now?
Now we can hear you.
Okay, so my success stories is one of the first clients I ever helped, and I don't forget this guy because I remember it was kind of jaw-dropping for me, coming from I just working before in traditional lending. But I had a client that came in with his first year of tax returns, and he was $250,000 negative. And he asked if he could have a $250,000 loan. And so in my banking days, I would have just internally giggled because that would have been a big flat no. But I asked him questions and I said, I see that you have 20 years of experience. Like, what's going on? Why do you have a startup that's negative 250,000 in experience in an industry that you have a lot of experience in? And so he mentioned to me that he had a business for 10 plus years. His spouse got cancer. So, he basically had to let go of his business, and he was just rebuilding it. But of course, because he did have a lot of experience and connections in the industry, he showed me his contract for 1.2 million. That and his credit score was decent. We did not collateralize his home, and we were able to give him that 250,000 that he was asking for just because I asked questions and it made sense. Our lending, that's what I love about CDC Small Business Finance. It's not, do you fit the box or not, other than, your credit score is at least a 620. Other than that, we're asking a lot of questions to see if it makes sense, basically, that you can pay us back. And so in this, situation, we were able to help this client with 250,000, and he is, of course, still successful at what he's doing. So it's a feel-good story for me because, from, just taking that time to be there for his spouse, we were able to turn things around for him pretty quickly.
Thank you. And I guess it's a day of goosebumps because your success story makes me feel good and goosebumps as well. We are right at 10 o'clock. So I want to be respectful of everyone's time and thank everyone who is here, Andrew, DeWitt, Larissa, Miriam, Alex, Janelle, and I think we had Frank drop off, but that's okay. Thank you for being here. Thank you for participating. We appreciate your time and your effort and your contribution to the program, as well as thank you all for your sponsorship and your support of the programs. Have a wonderful morning, afternoon, everyone, and we will see you next time. Take care.